Hey everybody, this is Jim at SP500chart.com. It is after the close on Monday, Halloween, October 31st, 2011. And just want to remind you that while I do use time-honored techniques to understand modern markets, and I do feature daily technical analysis videos of the S&P 500 index, which, by the way, for $19.95 can be yours at the end of every trading day with 95% delivery, on-time delivery, we'll say. Even though I do that, I don't do it as investment advice. The website and this video are for educational purposes only. Nothing stated in the video or at the site is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's look at the S&P. Okay, looking at a 30-minute chart, what I want to show you is here's the bottom back at about 1080. Rallied hard off that bottom, then entered into what appears to me to be something of a working channel. This channel has a better line at the bottom than it has at the top. Okay, this is the neckline to the head and shoulders top that was for 2 days, well, just a little under 2 days, was surpassed. And we are now back under it. You can see on a 5-minute chart that twice the S&P tried to rally to get back over that line, and it could not do it. And that really doesn't come as any surprise to those of you who understand how important that line is. Now, it did get over it for almost 2 days, and I think the reason for that is if you watch the weekend video, is that the NASDAQ has been over its neckline for, 2 weeks now. I have not checked the NASDAQ today, so I don't know whether it is still over it. I suspect it probably is. But the Russell 2000 and the Dow 30 Industrials, both over the weekend, were right at their neckline after having a big run straight up to it, and then it hit it on Friday like a brick wall and could not get over it. So I made the call over the weekend that I thought the markets were poised to head down lower. Now, I'm not saying that this channel is absolutely done. It's history, because obviously the S&P is still above this bottom blue line. But what I will say, and I think this is good advice, watch that blue line very carefully. Let me show you what's happening, what could be happening tomorrow. And it's important that you understand everything that's going on here, so pay attention. Look, we have this little cluster of expected support that is really right around the mid-1240s. Okay? What do we have here? Well, we've got this line right here. Let me back up on a 2-day chart, show you where that line comes from. That comes from the July low of 2009, the July and the August lows of 2010. And you can see that that line was broken, but now it clawed up above it. And again, I think that's probably due in large part to strength in the tech stocks, okay? But that line, since we did get above it, you could expect some support out of it, I believe, around, well, where is that exactly? I've got that around 1246, but there's also a few other things going on here, so let's talk about them. We've got this little purple line right here that's kind of covered up by that red one. What is that? Well, that is the line that got taken out on that gap up 3 days ago, on last Thursday. So, what do we call that when you have a line and then the markets gap up? A lot of times you'll get gap resistance out of that. And what that is, everyone who missed that gap up may be poised and ready, thinking if it comes back to that 1245 level, hey, I'm in. So expect maybe some support at that 1245 level. Additionally, we've got this rising trend line in this pattern right here, and all three of these line up tomorrow to midday. They all kind of intersect right around that mid 1240 area. Now, why is that important? Well, that could be where you get a bounce, okay? But it's also extremely important because if this area gets taken out tomorrow, then the next area where I would expect some support would be significantly lower than that, around the 1210 area, okay? And then if that doesn't hold up, and I would consider that pretty minor, to be honest with you, if that doesn't hold up, then that whole idea that I've had where I've been thinking that this orange line here needs some kind of a back test, that's really what the next spot is. You could say maybe a horizontal line underneath these two little bottoms right here that lines up kind of with this top here. So that might be 1195, 1190s. That could also create a bounce. But you know, the fact that nothing has really been back tested after this big move up, it just seems like it's screaming out for some to come down and find support. Just really find out where it, and that line moves on me. Okay, that's supposed to be right there. Okay, let me double check that. Yep, that's where that line is supposed to go. So here's our rising channel. If this channel breaks, then we could be coming back down to test this line right here. But again, that is definitely something that is predicated upon this cluster of support breaking in the mid 1240s, and it hasn't broken yet. So we cannot really, I can't tell you, hey, you know, get ready to buy in the 1140s because we're not there yet, and the first thing that has to happen hasn't happened yet. So for right now, I would just say watch that 1240, 1245, 1244 area tomorrow closely. If that goes, then this market is probably going to be heading down for some pretty serious test of support. Let me show you one more thing. If we work off this bottom down here, and we draw that up across this last bottom, this last low off that channel, you can see that that line got taken out today. I don't think that is extremely important, but I can tell you that as I recall watching the trading today, it looked like that produced an initial bounce and it didn't want to get taken out, and when it did, it pretty much just zipped down through there. So folks, that's kind of what I'm looking for right now. If we look at a 5-minute chart, if you're thinking, well, this could bounce up, you know, I think this line would be resistance. I think the neckline would still be resistance. So the market's got this cluster of support underneath it, and this as resistance. This is resistance, and this should be very strong resistance. So that's where we are. I appreciate you taking time out of your day to watch this video. And I just want to remind you that if you're watching this on the 31st of October, thank you for subscribing. If you're watching this on the 2nd of November, then please consider subscribing. It is $19.95 per month. You will get a video of the S&P and occasionally other indexes available to you after the close with 95% delivery. You know, there'll be a time when my computer's down or something happens, so I'm not going to say 100%, but I'm going for 95% of the time that the market is open, I will have a video. And I've got, 370 of them it is, I think, so far. And that's what I've done over just the past year. So if that's any indication, I'm doing pretty good. And look, please visit the website and consider that. If you find this kind of analysis helpful to you. Every subscription starts off with a $4.95 2-week trial, and there's also a yearly subscription for those who want to do that up front. So look, thanks. Take care.